Alright, so gang. Alright, so it's your boy Nature, aka Nature. Another video talking about candlestick patterns. We talking about Doji candlesticks. Alright, in the last one we was talking about marble candlesticks, and the basic candlestick. What it means, basically, like. Alright, so like there's more basic candlesticks that y'all need to like pay attention to. The next one is called the Doji candlestick. So Doji candlesticks have the same in open and close price as any other body, but their bodies are extremely short, like really short. Like they don't even have a body. Their bodies are very thin. Doji should have a very small body that appears as a thin line. Okay, so when you see dojis, they're thin lines. You'll just see like thin lines, and I'm about to show y'all examples of what dojis look like right here. So this is one doji right here, a long leg doji. You have a dragonfly doji, a graveyard doji, and then we got a 4 price doji right here, like a minus sign. I see these all the time. I don't really see that one like that. All right, so let's go back over here. So doji candles. So when you see a doji in the market in MetaTrader 4, make sure you download the app MetaTrader 4. When you see a doji candlestick, it suggests that it's indecisive going on as far as like they're struggling for as far as turf in position between buyers and sellers. So price may it may be above and below the opening price during the session, but close at the very near of the open price. So it's either like, so neither do buyers or nor sellers were able to gain control, and the result, it was essentially a draw. So there are 4 special types of doji candlesticks that you need to pay attention to. Alright, so dojis, the length of upper and lower shadows can vary. Okay, the resulting there are different type of like doji. So we have the long leg doji, the dragonfly doji, graveyard doji. So we're going to be going into like, you don't need to know everything, but you need to like know like the basics. So these are the basics. So when doji form on your chart, pay special attention to the preceding candlesticks. Okay, so you have to pay, when you see a doji, pay attention to the next candlesticks. Okay, so if a doji forms after a series of candlesticks with long hollow bodies, or long hollow bodies like white marbles, you see a doji form after 2 long white candlesticks going up. Okay, and you see a doji plus sign or some type of one of these dojis formed, and it been going up, like buyers aggressively been buying, right? And you finally see a doji. This doji signals that the buyers are becoming exhausted and weakening, and then these doji signal that a reversal might be coming. Okay. Alright, so we have doji candlesticks. In order for the price to continue rising, more buyers are needed, but there aren't any. Okay, so there aren't any more. So sellers are, licking their chops and looking to come in and, drive the price back down. So if you see a long marble or a long candlestick with little or no wicks and it's going up, and then you see a doji, a plus sign, or like right after that, that means that buyers are getting exhausted and that a reversal or sellers are about to come in. So long black candlesticks dojis, alright? Same thing with the long black candlestick dojis. If you see a doji form after a series of candlesticks with long filled bodies, like black long filled bodies, and you see a plus sign or like like a dragonfly, like right here, plus sign right here or right here, it means that this doji signals that the sellers are becoming exhausted and weak. So if you see that the trend has been going down and the sellers and then you see a doji after that, that means that they are becoming exhausted and weak, and it's about to be a reversal coming on. So it's very important that y'all understand the technical side of trading, so you can make sound trading judgments and make the most money out of your trades. So in order for price to continue falling, there will have to be more sellers, but sellers are trapped out, and buyers are foaming at their mouth, waiting for a chance to, to get in cheap. So if you see a doji after a white candlestick going up, a long white candlestick going up, it's a reversal. Same thing, you see a doji after a black long candlestick been going down, it's a reversal most likely. All right, so doji candlesticks, while they decline is spurting why the decline is spurting during the lack of new sellers. Further buyers' strength is required to confirm any reversal. So you have to look, for the next candlesticks, patterns to see if a reversal is coming up or something. The price market won't just go all the way up. No, it doesn't do that. It reverses, it goes back down, it retests this, and then it goes back up or decides if it wants to go back down. So you have to really understand the technical side of candlesticks and understanding how it works. So look for a white candlestick to close above a long black candlestick of opening. So in the next following lessons, we're going to be talking about more candlesticks, okay, and we're going to take a deeper look on different types of specific Japanese candlestick patterns and what they are telling us, okay? So all these candlestick patterns are telling us when price is going up, when price is going down, when price is reversing, when price is, indecisive, okay? So this is all technical analysis and technical support, and so this is what like 95% of trading is about, okay? It's technical. So however, hopefully by the end of this lesson on candlesticks, you will know and be able to recognize different types of forex candlestick patterns and make sound trading decisions based on them. All right. So, so there's all types of candlestick patterns that you need to know. All right. So there's single candlestick patterns. Now that you're familiar with the basic candlestick patterns, we're going to talk about single candlestick patterns. We're going to talk about double candlestick patterns too. You have single candlestick patterns, you have double candlestick patterns. I'm going to give y'all both of them in this video, alright? So, now that you know the basic patterns like spinning tops, Marlboros, and dojis, let's learn about recognizing single candlestick patterns. So when these type of candlestick patterns appear on your chart, it signals a potential market reversal. So here are some 4 basic single Japanese candlestick patterns. You have the hammer and you have the hangman. Okay, so the hammer and the hangman, they look exactly alike. Okay, they have totally different meanings. Okay, depending on past price action, depending on what happened in the past, they have totally different meanings. So both have little cute little bodies. Okay, and it's either going to be black or white, and it's going to have a long lower shadow or a short lower shadow, or a high upper shadow or a short upper shadow. Okay, all right, so we have a hammer and a hangman. So this is what a hammer looks like. Okay, this is what a hangman looks like. Okay, so the hammer is right here, hangman is right here. So the hammer is a bullish reversal pattern. So when you see a hammer right here and on a downtrend, and it's been going down, and you just see a hammer, which it's going to look like a little small box with a long wick at the bottom, and you see it at the end of a downtrend. This means that this is a bullish reversal pattern, meaning that forming is a bullish reversal pattern that's forming on a downtrend. Okay, and it has its name. It's named because of the market, because of it's hammering out at the bottom. That's why it's called the hammer, because it's hammering out at the bottom. Same thing with here, is hanging up at the top. It's kind of like a hangman, like it's hanging itself at the top. It's kind of a hammer at the bottom. So this is why it's called a hammer. So when you see this pattern form on a downtrend, it usually means that it means a bullish reversal pattern that forms during a downtrend, and when you see it, it means that it's reversing back up. Okay, so when price is falling, the hammer signal occurs. When you see price falling, and then you see a hammer signal, you see a little small box, and then you see the wick hammering out at the bottom. This means that that this signal means that the bottom is near and that price will start to rise again. It's going to start rising again. So the longer shadow indicates that sellers, right? The longer shadow right here indicates that sellers push lower, but the buyers were able to overcome this and this selling pressure and close it near the opening. Okay, so it went all the way down here, but buyers were able to come back up and close it near the opening right here. Okay, so this is a bearish, I mean a bullish reversal pattern, meaning that prices wants to go back up. All right, so same thing with Hangman. So if you see a Hangman pattern, what it usually means is just because you see a hanger, just because you see a hammer form in a downtrend. So same thing. So just because you see a hammer, right, form in a downtrend doesn't mean automatically place a buy order. Doesn't mean to place a buy order. Okay, you have to look at the next candlestick patterns and see what they're doing, okay, before you can make a proper buy. So the more bullish the confirmation is, the more longer the wait is, the more you get confirmation about it's a bullish confirmation. We need more information before we can pull the safe trigger, pull the trigger. So typically in this example, we will wait for a white candlestick to close above that hammer. Okay, we wait for a white candlestick to close above that hammer, signifying that it's a bullish reversal pattern and the trend is going back up. Okay, so for hammer, so you're looking for a long shadow. All right, and it's about 2 or 3 times the real body. Okay, it's going to be bigger than the real body. It's going to be about 2 or 3 times the real body. It's going to be little or no upper shadows. Okay, and the real body is at the upper end. Okay, it's not at the lower end. It's at the upper end. This is for Hangman. Okay, for the training range. The color of the real body is not important. Okay, so this is this is how you know. This is one of the doji. This is called a hammer, or this is one of the single candlestick patterns. It's called a hammer, and when it forms at the end of a downtrend, a reversal is coming back up. So, if you want to wait, like I said, you want to wait till you get a big white long candlestick, or a big green candlestick to confirm that it's going back in that direction. Okay, because the market can do whatever it wants. Okay, it can, trust me, it does whatever it wants. All right, so. So important that you understand the technical side of it, so you can make sound judgment. So Hangman pattern is similar to the hammer. Like there look exactly the same, but you're going to see a Hangman pattern at the instead of being at the downtrend, it's going to be on an uptrend. Okay, when it comes to hanging, hammer is going down, hanging is up. Okay, so when you see a Hangman, hold on, messed up. All right, trying to get okay, there we go. So when you see a Hangman pattern form, it's a reversal pattern. Okay, and it usually forms also at the top of a strong resistance level. So it usually forms at the top of the trend. It usually forms at the top of the resistance level. When you see a Hangman pattern, it indicates that price has been rising, but the Hangman indicates that sellers are beginning to outnumber the buyers. Okay, because you could tell. Sellers they look exactly the same, but one means totally different. When you see this, it means that sellers are about to, at the top, it means sellers are about to come back in. If you see it at the bottom, right here, it means that buyers are about to come back in. Okay, so this means when you see it at the top, when you see a Hangman pattern form at the top of an uptrend, it means with long lower shadows. It shows that sellers are trying to push. You see a long lower shadow, a small body, so it's not a lot of momentum here. So it means that, and it wants to push it down. This means that sellers are pushing price lower during this session. Okay, buyers were able to push price back up. Okay, buyers. So it went like this. It closed. It opened at the top. When it's going down, it opens at the top and it closes at the bottom. Before it closes at the bottom, it must go back up to the top. All right, so it opens at the top because it has to close back at the bottom. All right. That's for a downtrend. If it's uptrend, it will open at the bottom and close at the top. Okay. So back to this example for Hangman. You can see right here that there are long lower shadows, meaning showing that sellers want to push price lower during the session, and buyers were able to push price back up. Like as you can see, that's what that little box is. That's the price. Buyers were able to push it back up. Some, but only near the opening. Okay, it wasn't able to go above, the opening. So this should set off an alarm, and tell everybody that there are no buyers left and to be provided necessarily, and momentum to keep rising that price. So momentum is about to change, and a reversal is about to happen. It's about to go down. So it's important when you see Hangman, when you see a Hangman at the top, or when you see a hammer, they're both the same. Okay, as far as like the color really doesn't matter. But if you see it at the bottom, it's reversing up. If you see it at the top, it's reversing down. Alright, so this is very important that you understand hammer and hanging patterns. So just because you see a hammer form, it doesn't mean it doesn't mean like it's for sure you get in. You have to wait, and you want to see if you got a white long candlestick. If it's going down, if it's going up, you want to wait and see if you got a long black candlestick, because it's going, and most likely you'll see it. Okay, because this is what these candlesticks, these single candlestick patterns represent. It represents reversals. Okay, in the market. So that's very, very, very important to know. Alright, so recognizing a hanging man. So a hanging man is a long lower shadow, right? Which is about 2 or 3 times the size of the real body, with little or no upper shadows. Okay, a real body is at the upper end of the trading range. The color of the body is not important. A black or not important. Is a black body is more bearish than the white body, so it's not really important. What's really important is to know that if you see a hanging man at the top, it's going down. You see a hammer at the bottom, it's going up. All right, so I hope that helped. We also have inverted hammer and shooting star. Okay, so an inverted hammer and shooting star also look identical. They also look identical. Okay, but they also have different. They're only different between whether they're on an uptrend or a downtrend. So if it's on an uptrend and downtrend, they mean totally something different. Just like hanging man and hammer. So an inverted hammer is a bullish reversal candlestick. So an inverted hammer means that it's going back up. A shooting star candlestick pattern means it's a bearish candlestick, meaning that it's reversing down. So both candlesticks have little bodies, okay, and it's either filled or hollow, okay, it's either white or black, and it has long upper shadows. Instead of it going down though, the shadows are long up, okay, and there's small bodies at the bottom, okay, because it means that price wants to go back up. Okay, so like I said, an inverted hammer and a shooting star, they look exactly identical, just like the hanging man and the hammer. So this is an inverted hammer, and this is a shooting star. Okay, so the only difference is between a hammer and a hanging, is these will be down here. Okay, so this is an inverted hammer, and this is a shooting star. So inverted hammer, shooting star, boom. So inverted hammer occurs when price has been falling. Okay, it suggests that a possibility of a reversal is coming. So when you see a candlestick and you see a long wick going up, towards like the buying, because up means buy, then this long upper shadow shows that buyers tried to bid the price higher. However, sellers saw that buyers were doing so and attempt to push the price back down. That's how you see that little box, because they attempt to push price down. But however, unfortunately, the buyers were able to eat enough and force the price to go back up in that direction. So this is a clear, when you see inverted hammer, this is a clear indication that price wants to reverse back up. I know it's a little similar to the hammer, but it's this and it also like comes on the downtrend. But it's going, the inverted hammer is, the wick is up, not down. Alright, so same thing with shooting star. Alright, an inverted hammer, since the sellers on the inverted hammer, right, since the sellers were able to close the price and lower, this is a good indication that everybody wants to sell has already sold. So this is a clear reversal pattern. When you see when you see an inverted hammer, it's a clear reversal pattern. That means that the sellers are already sold out and they're exhausted, and that buyers are ready to come in. And if you see that, then there are no more sellers who are left. So this means buyers. Okay, this means buyers. All right. So shooting star. Shooting star is a bearish reversal pattern. Okay, a bearish reversal pattern, meaning it's going down. It usually shown. It is 9 to 10 times is shown at the top of an uptrend. So its shapes indicates that the price has opened above, but sellers tried to push the price back down. Okay, so it opened above, but sellers tried to push the price back down, and they did. They pushed it back down, but they couldn't push it all the way back down. This means that this is because buyers are attempting to push the price back up. Okay, but sellers came in and tried to push it over back down. But this is a uptrend reversal pattern. This is a bearish reversal pattern, meaning that there are no more sellers left. There are no more. Did I say that right? Yeah, this is a bearish, meaning there are no more sellers left, and reversal is going on a downtrend. So when you see a shooting star at the up of an uptrend, it's going down. Okay, there are no buyers left because they have been murdered. Alright, so now you understand what a shooting star is. This is what a shooting star is. Alright, it indicates that buyers, that reversal is coming, and a hammer indicates that that a reversal is coming in the uptrend. When you see at the top, it's going down. When you see at the bottom, it's going up. Okay, so that's inverted hammer and shooting star. Alright, I hope that helps. So I don't want to give y'all too much. The next session, we're going to be talking about Japanese candlesticks. We're going to be talking about dual candlestick patterns. Okay, so what's better than single candlestick patterns? Dual candlestick patterns. Okay, so to identify dual Japanese candlestick patterns, you need to look for specific formations. Okay, that consists of two candlestick patterns, two candlesticks in total. So there are two types of engulfing candlestick. You have a bullish engulfing and you have a bearish engulfing. So this is a bullish. When you see a bullish engulfing, this means that the white candlestick is bigger than the black candlestick, and they'll be right next to each other. Like you can't. So when you see those two candlestick patterns, those dual candlestick patterns, bullish, it means that this is right here. Buyers are more in control than sellers. Same thing here. When you see a bearish engulfing candlestick pattern, and it's bearish, meaning that it's engulfing. Engulfing means is like devouring. Okay, it's bigger. So when you see a bearish engulfing, when you see a little buyers and you see a long white candlestick form right after that, that means that reversal is coming. Okay, so these are the two reversal as far as dual candlestick patterns that y'all need to understand. So we have bullish and bearish. Okay, so This is the definition of it. So the bullish engulfing pattern is a 2 candlestick pattern for visual pattern that signals that reversal pattern that signals a strong up move may be coming. Okay, so it happens when a bearish candle is immediately followed by a larger bullish candle. So when you see a bearish candle, this is a bearish candle right here, the black one, and it usually this candlestick formation usually formed when you right after a bearish candlestick. Okay, it's the second candlestick, and it engulfs the bearish candlestick. The second candlestick always engulfs the first candlestick. So in this case, this candlestick is engulfing the smaller bearish candlestick. The bullish candlestick is engulfing it, meaning that buyers are flexing their muscles and that there could be a strong up move after a recent downtrend or a period of consolidation. Okay, and we're gonna talk about consolidation too, and what consolidation means. Uptrend is up, downtrend is down, and when you see consolidation, it's going sideways. It's meaning that it's not really doing nothing. It's just you have to wait for it to do something, make a candlestick pattern, make a marbles or a bullish engulfing, a bearish engulfing, a doji, something for you to get in. All right, so these are the two type of Japanese candlesticks. Is bullish and bearish engulfing. All right, and those are the basics as far as Japanese candlesticks that y'all need to know. You're gonna see them. I'm gonna have a lot of more videos showing y'all these candlesticks and pointing it out for y'all so y'all can be able to see it. So when you see these candlestick patterns, make sure you study these videos really good. And the more and more you practice, the better and better you get. You know, so it just takes practice, and you know you'll be good at it. You'll be the best trader in the world. All right, so gang, it's your boy Nature, aka Nature, gang.